Chris, I've been watching HGTV for a long time. I'm super excited to buy a house. Now, when should I apply for a loan? Talk about it. What's going on, good guys? Chris Newton here, Chris Newton Real Estate, chrisnewtonrealestate.com. Tell a friend to tell a friend. Like, comment, subscribe. Take that finger, take that thumb on both ends and smash that subscribe button. All right, I'm sorry. I know I go too far sometimes. It's just what it. All right, let's focus. So, when should you apply for a loan? Let's take a little deep dive into the conversation. It don't really got to be a deep dive. Let's just take a dive into the conversation, okay? So, when should you apply for a loan? You should apply for a loan when you sit down with your real estate agent, me, and your mortgage loan originator, and you guys come up with a plan. Now, a big talk in today's time, again, the time that I'm making the video, a big talk in today's time are the interest rates, okay? Interest rates are super high. Should I wait for interest rates to go down? Should I wait for a crash? Should I wait? 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 Should I do it now? This is what I'm going to say. You should apply for a loan when you feel like you're ready to buy, okay? Oh, a lot of real estate agents are going to get mad at me. So what? That's when you should apply for a loan. You should apply for a loan when you're ready to buy, okay? Why do I say that? Because when you're not ready to buy, you're going to waste a lot of time, you're going to waste a lot of energy, and you're going to waste a lot of money. With all of that happening, especially simultaneously, you're going to now start getting buyer fatigue, and you're going to get discouraged even more from buying a property. So when you're ready, how do you know you're ready? You just can't stop thinking about it. You're dreaming about it. You're eating about it. You're salivating at the mouth. You're like, oh my God, I need to buy a condo. Oh my God, I need to buy a house, a co-op, whatever. That's when you know you're ready to buy a house, okay? That's when you know you're ready to buy a property. That's when you know you're ready to purchase real estate. Now, when should you actually do it? Or how do you do it? Don't worry about the rates, okay? I don't want to say the date, the rate, and marry the house, and oh my gosh, it drives me crazy. Some of my mentors are going to be mad at me. Oh, well, I don't care. Don't get mad at me, please. What I'm saying is this. Worry about your payment, okay? So now, let's say you're renting. You're a first-time home buyer, and you're currently renting at this moment. You make, okay, so we're going to make this national, okay? So you make $80,000 a year. So comfortably, you're used to paying around $2,000 a month in rent, you know, comfortably. So that's 40 times the rent, basically, right? If I'm off, please don't get mad at me, but that's what it is. So let's say you and your partner, you guys bring in $160,000, so that's around $4,000 a month, you know, that you guys may qualify for, or that you guys feel comfortable paying in rent. Again, let's keep it at rent. You want to now own. You guys have a healthy savings. You guys have great credit, and you're ready to make that move. My advice is going to be, if you're comfortable with that $4,000 a month, or that's your max, that's what you're looking for, just a $4,000 a month payment. That's what you look for, okay? So you don't worry about the interest rate. The interest rate could be 30%. As long as you're paying that $4,000 a month, that's what you should be focused on, just the payment, okay? So this is where your mindset starts shifting away from the interest rate. This is when your mindset starts shifting away from other properties. This is when your mindset starts shifting away from discouragement. $4,000 a month is what I want to pay. Now, can you afford to pay $5,000 and still be comfortable? Comfortable, not up to your neck in water. Like you're comfortable at $5K a month. Okay, great. So now you know you're going to look at properties that you're going to pay no more than $5K a month in rent. Sorry, but still look at it as rent. It's going to be a mortgage, but you're going from $4,000 a month in rent to $5,000 a month in rent. That's going to make it easier for you, okay? So we know that the word rent changed from rent to mortgage, but just think, you're paying $4,000 a month in rent to $5,000 a month in rent. Now, if let's say you're buying a condo, or you're buying something with HOA fees, okay, homeowners association fees, or HOA dues, or however you want to common charges, however you want to say it, maintenance, whatever. Now you want to factor that into your $5,000 a month rent. Again, the rent is just a substitute word for mortgage, but we just keeping that rent, okay? So you want to factor that number in. So let's say the HOA fees, you're not willing to pay no more than $500 a month in HOA fees. So now you know your rent is going to be $4,500. You're looking for $4,500 a month because the HOA fees are going to be $500. So now if it's a little less, you got a little room for a buffer. If it's a little bit more, your cutoff was $5,000. If you can afford another $30 or whatever, that's on you. But again, you only want to worry about that $5,000 is your cap. That's it. $5,000 is your cap. So this is what you're going to be focused on. So $500 here, $4,500 in rent. So now that's your $5,000 a month in rent. Now, you're okay with that. You're okay with that. Great. So maybe you're only able to afford a $700,000 loan. That's fine. Even if the interest rates, again, the numbers are just examples. So even if the interest rates are 10%, you don't care because you're worried about that $5,000 a month in rent. Okay, remember, you're just going from $4K a month in rent to $5,000 a month in rent. That's it, you're just upgrading. Now you own that rental space, whether it's a condo, whether it's a house, whether it's a co-op. Now you're going from you paying a landlord to you paying a bank, okay? So now you're paying that bank. Why? Because now you're going from the mindset shift of renting to owning, okay? So now you're not paying the rent, you're paying the mortgage. Great, but it's still $5,000 a month. So now that's when you know you should apply for a loan. That's when you know you should apply for a loan. When you have that mindset shift, you're only paying that $5,000 a month. You're only paying that $4,000 a month, $3,000 a month, whatever it is. And now you're ready. You want to start looking for a property. The situation is growing. These are reasons why you should apply for a loan. You want to build equity. You want to start investing, so on and so forth. But these are reasons why you should apply for a loan, and this is when you should apply for a loan. Okay? I hope I answered your question. If I didn't, leave it in the comments and curse me out. If I did, leave that in the comments and tell the other people in the comments that's trying to curse me out that they shouldn't be cursing me out, and then y'all curse them out. All right? I'll talk to you guys soon. Like, comment, subscribe, smash that like button. I'll talk to you guys soon. Subscribe.